So this is how to set up inventory valuation with Anglo-Saxon accounting. So if you open this page, we have an explanation, several options, having standard price, average price, FIFO, LIFO, and a small explanation, and even the numbers change here when you move it. And then how to use a periodic inventory valuation, default. Here it says default configuration out of the box, but that's not correct. It's not default. Default is manual. But I have here an example, and in this example I have products. I have two products, omelets and eggs. So the eggs belong to this internal category, which is raw materials. The omelet belongs to finished products. The omelet has a manufacture route and a make to order, and also has a bill of materials, which is for eggs. And then you have the egg. The egg has a buy route, a make to order. That means it's going to be immediately, it is going to create, when you confirm the sale order, it's going to create immediately an RFQ to this vendor here at this price. The price for the eggs is 1 and cost 1. It's only purchasable. And then the cost of the omelet is 4.5 and sale price is 5. So let's think it takes 4 eggs and 50 cents would be the labor, for example. But it's just for us to look and see what happens on the accounting as we buy, sell, receive, send, and book the payments. So go to sales, quotations, and let's create one like Acme Limited. And let's sell 100 omelets. Let's remove the taxes, we don't need them. And yeah, so there's another thing I've done in the configuration. I added an additional step in production, stock valuation account. I added this account, and then in the product categories, that's where you have the stock valuation configuration. And if you open inventory, product categories, so we have all income account and expense account. This one has standard price. Well, let's just change this to perpetual, automated. And here also perpetual. And here perpetual. So wait, I misread this. Periodic, yeah, periodic is manual. We will use perpetual. That's automated. So this one is the one that's going to generate the moves, the accounting entries that match the stock moves. Okay. So this is the example of receiving a vendor bill, goods reception. There's no journal entry. Customer invoice. Customer shipping, no journal entry, and manufacturing orders. So only when you receive the vendor bill and goods and customer invoice, that's when you have the journal entry. This should be the manual entry. So at the end of the year or month, your company does physical inventory, just relies on inventory in Odoo value in the stock into your books. So you can look at the stock in Odoo and just add the entry in your books manually. Perpetual inventory valuation, it does this automated, and so vendor bill, customer invoice, but also for goods reception from supplier, vendor bill, goods, supply goods reception. And customer invoice, customer ship, production order. This should be, this seems to be duplicated here. So assets, received not purchased. And goods reception, supply goods reception, what's the difference? PO 50. So this is a different PO, probably. Yeah, we have two POs here. Okay, let's look at our example. So in our example, I set up finished goods to stock valuation account, finished goods, stock input and stock output account that I created. And for raw materials, we have the same stock input, stock output. We just have different stock valuation for raw materials. So now let's follow up and see what this generates in terms of accounting entries. So if you go here into not inventory to accounting, you can see in the advisor journal items. So right now we don't have anything. We could have start balances, that would be at least normal, but you're just going to look into this these specific transactions. So first thing to do is I'll go and open my sale, my quotation, and I confirm the sale. So when I confirm the sale, nothing happens. You see, this is still the same. But when well, I'm not going to send the goods because they are not yet ready. So we will have in manufacturing order that was created here, right? The system created this for us because we had the bill of materials. And we will have on the purchase side, you have a purchase order for groceries limited to 400 eggs for 100 omelets. So let's confirm it's the value, it's this one. Let's do one thing. Let's remove the taxes here also, so we don't make any confusion. Confirming the order. The same when I confirm the order, there's nothing here. But when I receive the shipment, suppose it's I don't pay after 30 days, I only pay after 30 days. So I'll validate this, yeah. And at this point, we get something. So we get the 400 pounds in raw materials from stock input to raw materials, okay? So now the following step would be maybe receiving the vendor bill. So let's save. Nothing happens until we validate. So let's validate here and refresh again. Okay, now we have from stock input to creditors control account, which is payable, right? So this account has balance 0, and now we have raw materials with 400 and payable 400. Okay, so maybe let's pay. Register the payment to bank and validate. Okay, now let's check again. Okay, there's the bank and the creditors account now balanced 0. So this is 0. So we only have balance in the bank, and we reduce the balance in the bank, and we have 400 in raw materials. So next step. So we got the goods in, we have the eggs. Let's do the omelets. Let's go to manufacturing. Let's take this manufacturing order. So the manufacturing order is just like a stock delivery or a stock receipt with additional features. These ones that you see here, these are stock moves. Move raw IDs you see there, and the relation says stock move. It means this is really a stock move. And finished products, the same. It's also a stock move. So this is consuming on this side and it's producing on that side. So when I produce, I'll produce the 100 omelets. So maybe I have everything, but nothing is posted, it's not appearing anything. Yeah, we had 6, now we have 6 anyway. We need to post them. So post inventory or mark as done, I think that would be the same thing. Refresh. Okay, now we have, so this was the last one. 1, 2, 3, 4, 5, 6. Here we have from raw materials to production, and from production to finished goods. Okay, we can mark this as done. And now let's go to the sale order, because we have our goods in. And the delivery. And let's validate everything. So we're going to send the products. So right now we have 2 additional entries, and it's stock output, finished goods to stock output. So that means finished goods will have balance 0, and stock output will have the 450. As you remember, the omelette cost was 450. So it's going to consider not a calculated cost, but the real cost that we have on the product. That all depends on the cost valuation type, right? So let's try to duplicate here and see some reports for general ledger. Yeah, so finished goods, balance 00, you only have balance in stock output. Minus 50 in production, that's the difference between the cost and the cost of the finished goods. The omelette was 4.5, and the cost of the 400 that has entered. So the difference is here. And then the bank, that's our balance. So let's move on now. We only left to, we mostly finished, so we have to create invoice. Create invoice, validate. Okay, when you do that, debtors and cost of sales, the 450. Let's refresh this one. Okay, so now we have minus 15 production, we have 500 debtors, that's how much the customer owes us. And then we have 400 in bank, minus 400. And then we have sales for the cost of sales, 450. And this is a revenue account, the 500. It's negative because we need to receive the payment. So now let's receive the payment from the customer and validate. Okay, again, check. So we paid our supplier, refresh again. Okay, so we have a balance of 100 in bank, and the revenue 500, cost of sales 450. So cost of sales is for the cost of the finished good. Okay. And well, that's it. We finished. Of course, you can use this configuration in several ways. If you don't want a stock output account, you can just set the same as stock valuation, and it's going to create the same balance. And well, this can be configured in several ways. This can help to understand what moves Odoo creates and how you need to set it up here. And that's all. Thanks.